The Federal Reserve has raised interest rates by 75 basis points for the first time since 1994. It's easy to be bold and aggressive early on while you can. Welcome to the channel. My name is Dennis, and today we're going to be talking about the Federal Reserve raising interest rates by 0.75%. Is this a smart move, or have they completely lost their minds? Let's waste no time. Let's get right into the content today. Before we do, if you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me. The Federal Reserve has raised interest rates by 75 basis points for the first time since 1994. And I'll be honest, when I first seen the news, when I first read about this, I was completely shocked. Why in the world would you do this? Why would you go this big, this bold? I was thinking to myself, they've lost their mind. They're trying to crash the economy. But, did my research, did a little bit more thinking, because I really like to do the research. I'm literally all day, all the time, markets, crypto, stocks, you name it. I read about it. I do a lot of crypto videos, but I also do plan on doing a lot more stock market, company related, economy related videos, because literally I'm reading, I'm doing research, talking to people, investors, economists, all that type of all day, every day. So the more that I thought about it, the more that I looked at the data, I do agree with the Fed's decision to go this big, to go this bold. The reason why is because think about the 0.5 that they did raise last month. It really didn't do anything. It did not really show anything in the number. It didn't budge inflation. Now we at the 1 month where it kind of looked like it was going good and spiked right back up to what it was. So the hikes that we've seen so far, the 0.25, the 0.5, they did not do what the Fed needed it to do. The goal of what they're looking to do right now is to cool inflation. It cannot and should not run at 7, 8, 9%. It should not be in that range. They want it to be closer to 2.5%. Far off from that. To get it back down there, you have to cool off the demand. It's an unfortunate, ugly part of the cycle, but as investors, as citizens, as educated people, need to know why it's happening. And the point that we are in the market cycle right now, inflation is being so stubborn for so many different reasons. That this war is not good. What it is doing to commodity prices, what it is doing to food prices, and I'm telling you this right now, what you are seeing in food prices isn't even necessarily priced in. That is going to come at a later time in the fall, in the winter. You're going to see, if things don't get fixed, you're going to see even bigger food price hikes. The prices with food that we are seeing right now, they are not necessarily reflecting the war, because the harvest that goes on right now, the food that comes out summer, fall, just pay attention to that. Remember that was said, food of thought, take it as you will, but supply chain issues, everything that's going on that's affecting inflation, the Fed is going bold. They are really trying to fight it. And the Federal Reserve has reiterated or stated a couple times that any future rate hikes are going to be based off of the data. If they go bigger, smaller, the same, it's going to be based off of the data that comes out. What happens with inflation moving forward? They said a 0.75% rate hike is not out of the question next time. I've even heard stuff like a whole 1% hike if it's necessary. So the Federal Reserve, they don't like to shock the markets. They're not looking to shock markets. They're not looking to cause a recession, but they understand what their job is, what their role is in this system. With this rate hike, they went big, they went bold. They are getting the job done. So now that we know exactly what they did and a little bit of the backstory of why it's happening, let's talk about how this is going to affect markets. What does this mean for you and me? The Federal Reserve went big and bold. They went aggressive with this 0.75 rate hike. Now you got to think, when they started this process, at first it was a 0.25 rate hike. It was expected at the time. After that, they went to 0.5, and that was, a little bit shocking, a little bit bigger, but you understood why. Now this time, 0.75, in a time frame that has, been since this high of a rate hike has happened, just a lot of talk, a lot of chatter about it. Next time they said, it could be 0.75 again. We could even do a whole percentage point depending on what the data shows. And in all honesty, what I have to say to that, it's easy to be bold and aggressive early on while you can. And what I mean by that is that there's going to come a different time in the cycle. These rate hikes aren't just going to happen and nothing negative comes from it. So at a point where you have unemployment that's going up, unemployment numbers are going up, the markets are crashing, the economy is tightening, things are maybe even going in a negative direction. At that point, it's hard to go very, very bold, very big, like a 0.75 rate hike. So right now, you have low unemployment. The unemployment numbers look good. The economy is still growing. Its GDP is still going up. There's issues with the inflation, obviously, while this is happening. Everything's not all peachy, but there's still, jobs are still hiring. There's not a whole bunch of layoffs. There's not panic in the streets, that type of stuff. So it's easy to go aggressive and to be bold right now. 0.75, if you have to go 0.75 or even 1% next time to get the job done, you take your big swings now while the picture is still relatively rosy compared to, let's just say, 6 months or a year down the line. So hypothetically speaking, let's say that at that time that unemployment is higher because companies had to lay off, people aren't hiring as much. Markets, the economy, they've kind of retracted. Inflation is going down because there's not a lot of spending, but you still want to get inflation to a certain point. It's not there where you want it yet. At that point, it's hard to do a 0.75 raise. I sent a major thing. You don't want a deep recession, so you do these major rate hikes now so that down the line later on, you might be able to do just a 0.25, a smaller rate hike. It's an art to it. It's you have to do this a certain way. You're gonna send shockwaves to the market. Markets are gonna go down, react negatively. That stuff is to be expected. You don't want a recession, but you understand that you might cause one. And if it is, you want a mild one. You want a soft landing, but if you can't get one, you don't want to just bust the whole window out. You want to make it as mild as possible. And by being aggressive right now, they are ensuring that they could do that at a later time. Like I said, there is an art to the way that you do this, and by being aggressive right now, I do think that the Fed understands what's really going on and what they need to do. They are doing the job. So with this rate hike and any rate hikes that are going to come in the future, there's going to be turbulence when it comes to the markets. Things aren't all rosy and peachy. Things are negative right now, and they're trying to fix them. With that, there's going to be red, there's going to be turbulence. But even with all of that, I do agree with the Fed's decision. If you like content like this, leave a comment down below letting me know what you think. Make sure you subscribe for more content like this and hit that thumbs up button for me.